So this is part 2 of the bear markets, part 3. So here I was unfortunately the dates has disappeared in this chart. I think this was around 1916-17. The next one, I think this was maybe around 1922. So here we also made a low at a very similar time as current situation. Here the bounce was actually much longer, and it broke above the offset before we headed down, and then we found resistance at this level and went down further. Here we see we broke the 80-week offset very late, and this is 1937-38. Here we also made kind of a big double top, and here we see we capitulated right on. So this would be the place where we normally would bounce, but here the bounce came late, and it was more kind of a bottom formation. So what we have here, I think this is 1946-47. Here the bounce started a bit earlier, then we went down. We see we broke the 80-week offset at this point, generating a much lower downside target, but here we really couldn't break this low, so it was a big double low, and when we started to rally here we broke above the 80-week offset probably again, cancelling that signal, and the bear market was over. We have 1983. As I have mentioned here, this case never broke the 80-week offset. This was a very mild, more sideways bear market. Anyway, we made a low at the normal time. We made a consolidation pattern, but didn't really flush down, making a real bear market. It was more like a bottom formation, and then the bear market was over. So this gives us a suggestion about what are we looking for here. This was the big first move down, the big A, and this was the big B, and we are now looking for we are now looking for this. This is the small a, and small b, and then c, small c and big C down there. So that would be the ideal pattern. So we have to look for, if we start to gain momentum here, rallying much higher, we really have to question, is something else going on? And if we do break down here, it could be just a bottom formation, and we could rally and the bear market is over. So we have broken the 80-week offset around here, generating a target well below 3,000 in the S&P. So if things are really bearish, we should see a rather big downside coming in November, and this bounce, this Christmas rally, should not go much above the June lows, and then we will have the capitulation move down in 2023. So from this previous consolidation patterns, we have seen it began at a very normal timing, and the duration is mostly about this long, and we have seen some cases stretching this a bit out 1-2 more weeks, but should not have much more upside. Also from previous video I have seen that this consolidation pattern often retraces about 38% of this move down. So that means I think around, well, I can't quite remember, maybe 3,900. So I think that would be kind of allowed. So we are kind of in a range here from 3,600 to 800, and it could break a bit above that range, which should be a bull trap, and we should then flush down. But it could happen anytime. It could happen on starting Monday in the coming week. But as I showed in my previous video, my hourly data favors a bit more upside on Monday, perhaps Tuesday, but we are still in the bearish phase of my 4-week cycle. So then question is, do we go all the way down to the lower part of this range? Do we break below it, or do we not get all the way down here? And then we have a bullish